this motel is bringing in huge amounts of money, way more than it probably should, because the operator is actually doing a fantastic, unbelievable job.
The better performing motels in a competitive market, you can tell just by talking to the operator.
I actually think COVID introduced a whole lot of new travel trends that have been very positive for the motel sector. Like, you had suddenly borders were closed internationally, but also even in states. You couldn't get from New South Wales to Queensland or Queensland to New South Wales.
There is a goodwill factor in the value of accommodation that doesn't sit in a lot of commercial real estate.
Correct.
You know, if someone built a shed next door to another shed and their rent's cheaper, you're moving next door.
Yep.
Right? I also think as people become more familiar with these towns, we're all creatures of habit. What's your prediction for the industry? It can be anything you want to do. Joshy, what do you reckon the industry is going to be when we do the report next year?
It's hard to not see per key rates continuing to move up.
Welcome to Resort Brokers Radio. I'm Trudy. We're going to walk you through the ever-evolving landscapes of hotels, motels, caravan parks and management rights. Here we have experts from all across the accommodation industry, and we've invited them along to tell us all about their success stories, the lessons they've learnt, what their predictions are for the market going forward and what trends they're seeing. Please join us. We look forward to seeing you there. We're going to be talking all things motel, the fantastic report, the second annual report that's come out. We're going to be talking about what do the leading valuers in the space, Acumentis and M3 Properties, think is going to happen in the future with ADRs, occupancies, and where will they spend their money. So please join us. Part 1 coming now. Today I've got a fabulous podcast for you. I'm joined by my colleague Josh Mangleson, who is our property economist at Resort Brokers. Hello, Joshy. Thank you for joining us.
Of course.
And today we have two absolute leaders in the industry, and I want to make sure that I get their titles right. We have got Rob Tye from Acumentis. He's a senior specialist valuer. And we've got James Ruben from M3 Property, who is the National Director in Specialised
Assets.
Assets. Thank you very much. I
Thanks,
almost
Trudy.
got there. I knew it wasn't National Director, Specialised Director. First and foremost, though, I must say to Rob, thank you so much for joining us.
Thank you.
We also thank you so much. Today we're going to talk about the motel industry specifically, and we're going to drill into the motel report that we have just launched, the second annual report, the second year and the only study in the motel industry ever produced. And Acumentis, you guys were with us from day dot, and we can't thank you enough from that. You know, last year in the first report we had 3 data partners. This year, after everyone's seen the quality of work and the benefit it had to the industry, I think, we now have 11.
14, in fact. 11 new.
11 new.
Yeah.
11 new. And so we want to thank you very much, and thank you to Acumentis.
No, it's been our pleasure to get involved. Information makes the world go round, and the more that we can provide to your clients and our clients, I think the better off we all are.
Couldn't agree more. We always want to see people be successful. You know, we want to be able to sell them in and sell them out. I mean, we really want to watch people grow in their success and in the industry. And there is a lot of newcomers. But before we kick off, why don't you, and starting with you, Rob, whilst we're talking to you, why don't you tell us a little bit about what your role is all-encompassing.
Yeah, right.
So they know who they're listening to.
Yeah. So I'm with Acumentis. We're a national valuation firm. Personally, I'm based in the Toowoomba office and I cover the whole of Queensland. I focus exclusively on motels, pubs, caravan parks, smaller scale resorts and that type of thing. That's probably been my lot for the last 5 years. Yep. This year is my 40th year in the valuation space.
Congratulations, we're 41.
Yeah, it's been a long, hard haul, a lot of ups and downs and that sort of thing, but I'm still here to tell the story. But over that journey, you know, I have spent a fair bit of my time focused on the going concern space and tourism and leisure type assets, and I still find it challenging and stimulating, and 40 years on, I'm still here.
We say the same thing, you know, that no 2 days are ever the same because no 2 businesses are the same. So thank you for joining us, and thank you for the support. Rob, tell us about your day-to-day.
James.
Oh my gosh, I can't get it right today.
That's all right.
James, tell me about your day-to-day.
So I work at M3 Property. We're a national valuation firm, and I run our specialised assets team nationally. So our team does lots of different things, but a very large part of our work is hotels and motels, caravan parks and other accommodation assets. So we have lots of values. I personally undertake quite a lot of valuations all over the place. They tend to be the more complicated ones. And I read a lot of other people's reports within my team. It takes up a lot of my time. I really love working in the accommodation sector. The type of work is really varied, really interesting, very hard to pick parts of the businesses that when you look at them that are identical. Like everything you look at has its own feel, its own flavour, and that just makes, as a valuer, for me, other valuers might find that scary to have everything being different. But for me, I find that makes the job really exciting and interesting.
I could not agree more. I think as an agent, it's exactly the same thing. It does make it very specialised, though, doesn't it? And I know that when we did the roadshow for the report, we wanted to really make the point that whilst the report's unbelievable, and we will drill into it, and whilst the industry is going unbelievably well, every business is different. And I would say to anyone who's watching or listening, if you are going to spend any money or make any big moves, and whilst we hope you're looking at the report and using it as a bit of a guide and reference, that you absolutely are using specialists. These guys are the best in the business, but you absolutely are. So last year when we did the ring around saying we've got this crazy idea, why don't you give us all your data, which is obviously your IP, why don't you just trust us? We'll look after it, we'll keep it discreet. There's no way we'll give it to our agency team, which frustratingly we don't for them. Yeah. But what was the thoughts behind supporting us in doing that?
Yeah, I think, as I said earlier, that information makes the world go round. The data that we use in our valuation reports and the data that you use to sell a property and the data that people look at to buy a tourism or leisure type asset is not on the public record. So it's not like you can go onto realestate.com and get an automated valuation model or whatever.
Yep.
And so it's educating everybody who's in the transaction, whether it's owner, seller, lender, whatever the case may be. And if everybody's on the same page and got access to information, then everybody's job's a little bit easier. We all understand where we're heading. We know what's going on in the marketplace.
Keeps guardrails, doesn't it?
Yeah,
Do you know?
Absolutely.
And more important than ever if you haven't bought one before,
Yeah. Yeah. So that's that really is the motivator for us, is to, in simplistic terms, create a path of least resistance to getting through a transaction or a valuation. Yeah. But really it's to make sure that, everybody in the transaction's protected as well.
How many valuations over the years would you guys have done? Maybe let's bring it in total. In the last couple of years, on motels that haven't valued up?
That haven't...
No.
Where
that you haven't been able to get to the contract value.
And we've been below the...
Yeah, well, you just
price.
can't. When you just look at it and you go, the agent's made something, missed something, or in verification there's something.
I think quite often, particularly if there's been an open market campaign, and it's been publicly advertised and... the transaction has happened without, it's not a structured deal, it's a typical transaction. It's very unusual for it not to be at the purchase price.
Yes.
It does happen from time to time. It tends to happen in circumstances where buyer is not well informed, and where I actually see it most is, as a valuer, we make a base assumption that the date that we're valuing it at, it's what would a hypothetical buyer pay for that property? And we make a base assumption that hypothetical buyer is an average competent operator. And where we see people get unstuck is actually, strangely enough, where you have an overperforming asset, where you see, this motel is bringing in huge amounts of money, way more than it probably should, because the operator is actually doing a fantastic, unbelievable job. And as a valuer, when we're looking at that and we say, well, an average buyer, the hypothetical buyer, is not going to be a superstar. They're going to be an average operator.
Yeah.
And normally that fits in, but on the odd occasion we have someone who's really overperforming, we sometimes find it then a struggle to adopt and justify the ongoing continued performance, unless that incoming buyer is really also someone very, very
Wow,
special.
that must be tough, because effectively then you're saying, oh, that must be tough on every level, because as valuers you're looking back, aren't you? And you on the idea that the past predicts the future.
Yeah.
Right, and with all things being equal, this person's going to come in, and as long as nothing's changing in regards to ongoing contracts or something that won't be there tomorrow,
Yep.
that they should be able to earn the same amount of money
Yep.
with a two-person management team. So that must be quite a hard situation.
It is, yeah.
Yeah.
You know, and to the same extent, there's a lot of buyers out there at the moment who are looking at businesses to reset them in terms of their operational structure. And so you have buyers out there at the moment who are coming into the business, they're replacing a traditional couple management team
Yes.
who might have taken over the motel, let's say, in their early retirement years. They would tend to use staff and labour a lot more than some of the buyers in the current market who are younger or extended family groups
Yes.
and are going to put a lot more personal exertion into the operation of the business. So they're resetting the wages benchmarks.
Oh, I'm interested to know about that. Yes.
And that sort of flows all the way through. So you're getting a lot of buyers who have formulated their buy price based on their projections, which may not entirely reflect the historical trading performance.
So there's an element of you as a valuer having to actually work with the bank and be sure that the incoming purchaser is capable to generate that profit. Kind of.
I don't think we get down to the specifics of
No.
individual operators, but of course, you know, we all keep databases and we have benchmarks
Yes.
for pretty much every line item for operating expenses, and you just go and check across those. And if something's materially different, that's when we come into that. What would a competent industry average operator do? And that can sometimes end up with a profit shortfall against the buyer's projections and end up with a valuation shortfall.
Can I add to that? Because I think that's a really good point. And like something I've seen a lot of recently, and I'm sure you have too, is innovative operators. So particularly adopting new technologies.
Yeah.
And I have a client, I'm thinking of one particular client in particular who, I won't mention their name, but has bought old motels, which are these kind of old U-shaped 12 rooms,
Yes,
sort of
know
coastal
them.
town somewhere
Yes.
that have been traditionally run by retirees, and they've bought it, refurbished it, made it look nice, painted it pastel colours,
Love it.
and then put in Wi-Fi locks, IP cameras, all of this stuff. They run it remotely. It's on
So
booking.com.
cool, isn't it?
Yeah.
And then when we see their, and again, this is kind of that balancing act. So we will get their projections, and they'll say, look, we're gonna run at this occupancy and da da da. And then you look at their operational costs.
Yeah.
We go, well, actually, when we compare that to our benchmarks, that's way more efficient than.
I couldn't agree more. I
Then-
mean, as an industry,
And
we
you're
need
gonna
to
make-
adopt faster, don't we?
Yes, and you're going to make way more than an average operator would here.
Yeah.
And as a valuer, like it does put us in an interesting position, because when they're trying to get their finance, we're doing a valuation for a bank. The bank is saying to us, well, what would if we have to take this and put it on the market and sell it to an average person,
Yes.
what are we going to get for it? And quite often you can actually see, well, hey, these guys are going to outperform. Their system does work. It's proven at other places.
Yes.
And so we do it in certain circumstances. We will adopt that, but we will have to. Essentially, it does. While we don't, I suppose, work with the bank to arrive at a number, it's incumbent on us to inform the bank of our opinion. So we will write in the report. We write a risk profile, and it'll say, "Yep, we've put a value of this." But we might say in there, for example, this is contingent on them operating in a particular way, and whatever else. So we kind of put the bank as a financier in a position that they can then say to the borrower, hey, we want to make sure that you are going to tick all these
Almost
boxes
conditional.
to make sure that
Yeah.
it confirms that value is right. But it's that's probably a symptom of seeing these sort of innovative operators that are adopting new technologies and
great
really
to
driving
see.
revenue, driving down their operational costs and doing it in a really good way. And we've seen a number of really good success stories that are exactly like that.
Yep.
Operational costs, though, tell me, on I know in the report, bring it back to the report.
Let's talk about the report.
Let's talk about the report, sorry. 40%. The operating costs were 40%, Josh, I think
median.
they were.
Yeah.
Median. What does
Yeah.
median mean, Josh?
That's your. If everyone in this room stood up and ordered themselves in height from shortest to tallest, the middle person is your median, your 50th percentile. And so we deal in medians and upper and lower quartiles, which are kind of halfway between your median and your minimum and your maximum. That kind of gives us our
Like
middle,
25 to
50% or our
75.
middle in the case of a median. Yeah, just good
Well
statistical
explained.
indicators. Yeah.
I always think that's a very clear definition. And the report only refers to the median, doesn't it?
Yeah, or in some instances, there's an upper and lower quartile, particularly around yields, just so you can see a spread of yields and how they move over time as well.
Which was very, very clear. But
Yep.
tell me, operating costs then as a median is sitting at 40%.
Yes, that's right.
And that was lower than you and I thought it was going to be, wasn't it?
Yeah.
I mean, I remember back, gosh, I'm showing my age here and how long I've been doing this, but I'd say it was always 35%. For as long as I can remember. And when I say that, I feel like it's pre-COVID, post-COVID in the world.
Yes.
Because, you know, the industry in regards to yields, the buyer profile, even the ADR and occupancies on average across the country, they didn't move that much, did they?
Not pre-COVID.
Right.
Well, I actually think COVID was introduced a whole lot of new travel trends that have been very positive for the motel sector. Like you had suddenly borders were closed internationally, but also even in states. You couldn't get from New South Wales to Queensland or Queensland to New South Wales. So if you were in Queensland and you want to go on a family holiday, suddenly you're not looking at going to Fiji or whatnot. You're looking at going to the Gold Coast or
Or
you're
Port
staying
Douglas or Cairns or something,
And
yeah.
I think while that the borders reopened and people started their international travel again, but I think that has left a familiarity with the motel market that was waning. That pre-COVID, I think people had in their mind, holidaying in Australia and going to small coastal towns, and that's
not
from
the 80s anymore.
That's from the 80s.
Yeah,
that's from
exactly.
the 70s, and now all of a sudden there's kind of a new romantic
There's
sort
a
of
swing back to
attachment,
it, yeah.
And I think that's kind of driven this change and this sort of yes, the ADRs spiked during COVID, and yep, they came back, but they've sort of maintained more momentum than I think they otherwise would have.
Yeah.
Yep.
I mean, that's what's been amazing. It's been amazing to see that, and I think that's probably why the 40%. It's a real testament
Yes.
to industry, the support of the industry and the sophistication of the operators, that they've continued to increase their rate to the point that it has meant that even though all these increasing costs
Yep.
hasn't actually blown out.
Yeah, that operational expense ratio is really driven by occupancy.
Yep.
So if you've got a motel that's only trading at 60, 65%,
Yes.
which is quite a rarity,
Yes.
it's unlikely you're going to be having operating expenses at 40%. Conversely, if you have a motel that's operating at 90%, then it's a much more efficient business.
Sure.
See, it's interesting you say that because I was always taught the school of thought, and I would have this conversation, I reckon, once a month with the vendor when we're out on the road, about the balancing act of ADR to occupancy, because really I always understood that the money's in the rate. At a tipping point, I understand what you're saying. You've got to cover your base fees, right? They're to a certain level. Cost of a clean, your rates, and all that stuff is fixed.
Yes.
Electricity and all that. But you're much better having a property running at 75 to 80% at a higher ADR than you are at 92 at a lower. But again, I'm not the valuer. That's my school of thought, and you're looking at me saying you're not sure.
Well, I think it's interesting if you look at the history of the way a lot of these properties have been managed, because I think if you go right back, you suddenly had like introduction, we were talking 20, 25 years ago, of platforms like Expedia and What If and all of these kind of things, Booking.com and whatnot. And what that did was that that forced all of these kind of disparate motels to compete with each other. They're all online looking, going, oh, look, they're doing $100 a night, I'll do $92 a night. And I think there was a lot of downward pressure. And that kind of has, that sort of pressed forward. And I think when COVID happened, actually in certain markets where the markets stopped for a period of time, people were trapped in their houses, they couldn't travel. I think a lot of the operators almost had a moment where they stepped back and they looked at this at a high level and said, hold on a second, we could make our rate $1 a night and occupancy would still be nothing. This is a silly way to manage our occupancy. And I think a lot of those operators turned around and said, well, actually, to make this business profitable and viable, I have to charge X dollars a night.
Yeah.
And you know what? My occupancy might not always be at 100%. And I think there was a bit of throughout the whole industry, almost like a simultaneous realization that, hey, the way we manage our rates, and motel operators, they tend to be small individual businesses. You're talking about people who own...
from all kind of industries. Often it's the first commercial thing that they've stepped
absolutely,
into.
Absolutely.
Yeah.
And I think that it was COVID almost forced all of these little operators who, are focused on their businesses to suddenly say, hey, you know what? Maybe we should think about our pricing a bit differently. Yeah. And while when travel returned, when the occupancies started to recover, a lot of those pricing models that had, I say pricing models, I think if you speak to a lot of motel operators, they won't describe it as a pricing model. They'll go, I don't know, I just don't charge a bit more than I used to. But I think that the attitude in terms of pricing changed when COVID happened. And I think that's persisted a little bit. And that has led to, continued kind of, I think the ADR growth in motels is Josh can tell us in detail about the data, but I think it's a good news story. Like the last 5 years has seen lots of upward pressure generally and, a lot of growth in that space.
Yeah.
Josh, can you remember any of how?
Not specifically, but it is exceptional. Like if you're talking 5 years, it's sort of in the area of 80%, something like that in a lot of cases. Which is in line with what you see in the per keys as well over time.
Well, I mean, isn't that the phenomenal story? Well, it's been a good news story for the industry because you've had two things happen, right? You've had all of a sudden ADRs grow and occupancies because there is demand, which we'll drill into why there's so much demand continued. Then you've also had a thing, I think, where the people who have been driving around thinking to themselves, I could do this, and thinking to themselves, wow, this is a lot of property. How much does this go for? $2 million, $3 million. What do you mean? Oh, that's the price of my house, and this is right here on the beach. You look at some of those coastal things and what they used to trade for. And look, we've been doing it for 41 years, and I've been selling motels for my first one, 24 years this year. Whew. And it, up to COVID, it was always a lease was 30%, a passive investment was 9%, and a going concern was 15 or 14 and a half if it was great. And if it was 14.6, you knew you could split it, right? And things like that never change. And to your comments, which I thought were spot on about the rate, if you go back and look at it, I reckon online, when it first came out, online bookings and travel agents were like sandwich boards on steroids, right? You used to go around and all the moteliers would drive around the town and see what other motels were full, and that was a testament to how well they were doing, right?
Yeah. Well, I think even customer behaviour. I was saying to Rob before that I remember when What If and those platforms were introduced. I wasn't a valuer back then, but I actually was working in a hotel as a front office person.
I thought you were going to say you worked for What If, and I was about to shoo you off the table.
But what I recall about it was that customers, everyone has the same reaction. Like you would open it. The platforms used to be you open it, you'd say, I'm going to Brisbane, I don't know, pick a city, and you would get a grid of numbers, and everyone would have the same emotional. They would go, well, I'm not a tight ass, I won't pick the cheapest, but I'm also not a chump. I'll get the second cheapest. And every single person did the same thing, right? And so then all the hotels knew you had to compete on price. And now those platforms have actually, if you everyone uses booking.com or whatever, and you go on those platforms, they're much more sophisticated in terms of their interaction, and they allow a lot of the time the operators. By the time you're clicking book, you've seen photos of the place, maps. You've already told that you only want to stay somewhere with a pool, and so you're like, it allows those those operators to sell their product a little bit more than what it used to. And I think that is better tailored to consumer behaviour. Consumer behaviour has improved maybe as a result of that.
There was also a big swing towards reviews too. And remember, they started changing their algorithm a bit, and then it was all about the reviews, and one bad review about the coffee, would really get people's goat. You remember it all now. And now it's just a factor of business. It really shows you how things evolve.
One of my observations of late has been that there's still a human element. Like a lot of people are using booking channels and reservation management systems and all that type of thing. But at the end of the day, most of the positive feedback is about the conversation you have over the front counter at the front desk, the state of the room, the quality and presentation of the property and that sort of thing. And quite often the better performing motels in a competitive market, you can tell just by talking to the operator.
Without a doubt. There is a goodwill factor in the value of accommodation that doesn't sit in a lot of commercial real estate.
Correct.
If someone built a shed next door to another shed and their rent's cheaper, you're moving next door.
Yep.
Right? I also think as people become more familiar with these towns, we're all creatures of habit.
Yep.
I like that place. I like their breakfast. I like their beds. I like that girl. If someone who travels, I'm away 3 nights a week, and any time I walk in and someone goes, Trudy, where have you been today?
100%.
It's nice when you're away from home so much, and I don't think that will ever change.
Yeah. And that's if you're new to the business and coming in, that's the skill that you've got to develop. Those interpersonal skills.
Yeah.
You've got to know the town, because if somebody says to you, where do I get the best feed in town, or I'm heading in this direction, what's the best road to take, or all those little subtleties, but just know your product, know your environment, and try to understand the needs of your clients. And that way you're building your goodwill really effectively, probably more so than using, the management systems and booking channels.
It's a balance of both though, isn't it?
Oh,
I truly believe to get the best value when you transact, clean up. When things are now getting to these kind of levels, you're looking at a whole new profile of buyer, and the sophistication and the money that is being invested is just so much more significant. The need to be able to run your management system and keep good records, and I know we were talking about this offline earlier, is absolutely key, right? And there's great systems out there, but having the right data is key.
I think it's interesting that you say that personal touch, because I think you're right, and I think there's the vast majority of the property industry, all these sectors, personal touch doesn't matter. And you're right, when you say like industrial shed, you're paying $200 a square metre there, someone builds one next door, they're going to charge you $180, you move, who cares, right? Whereas when you're talking about those, I guess purpose-built properties, and motels fit perfectly in that category, but, along with pubs, and there's a handful of other types of assets where that personal experience really matters. And I think and probably just to loop back and link to what we were talking about before, I think there's also opportunities there to link that with the technology, in that having an excellent experience, an excellent customer experience. Yes, some people want the person that comes in and, oh, hi Trudy, how you going? And other customers want it to be seamless and not to be spoken to.
Absolutely,
and,
absolutely.
I always preference the self-checkout when I go to Coles and do my groceries or Woolies. And, and that's my personal choice. I'm like, I don't want to talk to anyone.
Oh, see, isn't that funny? I'll wait 3 people.
No, I always, but I feel like if you're clever about the way you implement that technology, those you can be quickly reactive. Trudy turns up and I know she's checking in. I don't have to physically be there.
You can send me a message.
It could be a message or a quick call like, hey, I saw you checked in. Just want to make sure everything's great. You stay with us all the time. Are you having a good time? Yeah, everything's fine. Fantastic. That will give you the same feeling as walking into the reception. As the sector evolves and as operators, improve the technological applications they put into running their systems, I think doing that in a way that's sensitive to keep those customers, I think that's really important, because I think you're right, Rob, in that if you lose that,
it's hard to get back.
You will
someone
suffer.
else
Your business will suffer.
And someone else will pick it up, right?
The opportunity to introduce, technology and contactless check-ins and that sort of thing. You got to look at the market that you're in, and I'd suggest that probably in a coastal market or a holiday-driven market, that's probably a little bit easier than if you were doing something in a Western regional centre.
Maybe it's because it's a younger,
younger demographic. I know of a caravan park that introduced AI. Their whole reservation system is AI driven, from who answers the phone to that sort of thing.
Amazing, yeah.
But they got some initial negative feedback because people staying in caravan parks quite often want to be told where to put their van. They might need assistance in getting their van appropriately sited and that sort of thing. So there's a little bit of a trade-off. In the motel space, it's probably not really that.
Isn't it? Yeah.
But you do have to understand what the demographic of your guests is and what their expectations are. And there is an age thing that possibly exists there. That's a broad generalisation.
We do actually touch on that in the report. We do break down by state into capital, coastal and regional.
That's the
what
newest
percentage
edition,
of young
isn't
and
it?
old people are staying in, in what age bracket.
Yeah.
And the regions tend to have an older stay. And then depending on the state, either the capital or the coast will be the youngest demographic.
Yeah.
So that makes sense then to follow that trend, doesn't it?
Yeah.
It's probably also linked. I think age is probably an important factor, but I would also put in the same category the reasons for travel, in that if you're travelling for work, you're a Western New South Wales town because you're a miner and you've got to be there 3 days a week for your job. You're probably not interested in much interaction or asking where the best restaurant is.
That's true.
Whereas you go down to Kings Cliff and you're staying at a trendy motel and you're doing that with mates on a weekend, you're going to be asking, hey, where's a good place to have a couple of beers and on the beach or whatever, you know.
We have that data in there too. We've also done reason for stay in the same analysis for that very reason.
But it was a good context to overlay. It was interesting. That probably that was probably the most logical data that you would maybe assume, don't you think? Of all the surprising things that came out.
Yep.
Yeah,
it's true.
It's a good news story. So let's talk a little bit about yields, because we touched on it, and the per key rate. So unbelievable how it's valued.
Yeah.
And obviously that's two things. ADR occupancy we've touched on, but it's yields. There's not been a lot of yield compression ever. Then COVID happened, everyone got on the road, it was good value. Do you guys see that changing? What's the tightest yield you've heard of out there? Are we allowed to mention that, or do we have to cut that?
I don't want to say in case one of my clients sees it and says, "Why didn't you put that on my property?"
Yeah.
Okay,
for something that's in a coastal hotspot, and James mentioned earlier about some of these motels that have been renovated to be sort of Instagram friendly. They've got the Palm Springs look going, that sort of thing.
They work for me every time.
The cover photo says it all.
Yeah, that's a great property. Yeah.
Shut up. You're seeing yields for those sort of things, down 7-8%.
Yep.
As freehold going concerns.
That's almost what the capital. That's almost what Sydney used to trade.
Yeah.
And it's what passive would have historically been.
Absolutely.
It's phenomenal. I remember when the Sheraton Sydney sold for $1 million a key, and it was in the paper, and it was big money. And we've just settled Ipswich, and that was what.
443.
Thank you. Good recall. 400. I was about to say 468. Add another 25 on. But
you're an agent.
That's not bad. That's 5%. That's less than normal. But it's phenomenal to see that. But in your heart of hearts, do you see the value still in the industry?
In terms of cash return, whilst interest rates don't move and there's still weight of capital in the market, the yields I don't think will particularly shift anywhere, but maybe further tightening against my better judgment. But, that's
I think so too. They represent good value. They represent good value.
It's really, value growth's really going to be driven by what you're applying the yield or the cap rate to. So it's the net profit that you're applying that multiplier to, that's going to be how you're going to drive value increases, and that again, as we talked about, ADR, occupancy, and managing your operating costs. And the yields are the yields. The yields are very, historically tight.
Yeah, down about a third, right? Across the board.
And, they're very challenging from a valuation piece because, historically we wouldn't have thought that a 10% yield for a motel or a 12% yield adequately reflected the risk, the property risk and the business risk, which are two separate components.
Yeah.
But we don't set the market. And the market's spoken, and at the end of the day, it continues to speak. And, the more recent sales that have come through in regional Queensland, we're starting to see, a big body of evidence in that 10 to 12% range, which scares me. But in New South Wales, in regional New South Wales, that's been going on for 2 or 3 years
I was
probably.
going to say regional New South Wales. I mean, I've seen transactions, tighter than 7%, which, it's sort of one of those things as a valuer. We have the luxury of, if it lines up with our sales, that looks about right. And whether it's worth that, tomorrow or whatever, that's kind of, for everyone else to think about. I think in terms of, like, if I was a hotel operator and I was thinking, where's my value growth going to come from? And at the end of the day, value is, as you both said, like it's just a function of your sustainable income and what yield or what cap rate you can apply.
Yeah.
Yep.
And I think there's a lot of prospect for income growth, and I think that is really what will drive
The
values
values,
going forward.
Yep.
I cap rates. Look, they may tighten further. To be honest, I've been surprised at and it's reflective of the demand in the market. I've been surprised at how tight they are now. But the market's there for it, and the valuer in me, everyone
Don't
accuses
get
us.
conservative
Everyone
on us. Don't get conservative
That's right.
on us.
Everyone accuses us valuers of being conservative,
Or historians.
but the valuer in me looks at it and goes, oh, there's nothing else to tighten there. But look, Trudy's kicking me under the table. Stop that. That's ridiculous. But I think that my gut feel is that cap rates they probably don't have a lot more tightening to do, but I think there's a lot of growth to come in income, which will I think that's where we will see, and both of those will translate into dollar per key value.
Yeah.
And I think that
A good delineation
that
there.
will be
because,
driven. That will be driven by the income, not the cap rate.
I think you have to, in that context, you've got to be cognizant, and again, depending on what market you're catering to. If you're catering to a tourist market, VA, more corporate, workforce type demand, there's still got to be a value proposition there for your guest, so that if you want to charge $220 a night in a regional motel, you've got to give somebody a pretty good experience in terms of what you're offering. Corporates are not immune to the inflationary aspects that we've all been exposed to.
Probably.
They're a little bit more
Traditionally,
immune, but they are starting to now sort of ask the question.
Everything's so expensive,
And tourist guests also will probably say, $200 a night for something that, pre-COVID I might have paid $125 a night. So you're just gonna there's a tipping point there. And so if you're gonna really drive your ADR, like I said, that value proposition, you still got to be cognizant of it.
I've got to be honest with you on how I see that, right? I think Australia was an under-tariff market. I think the cost to clean a room and run a business these days, if you don't do it, is unknown. Like, I think it's moving at such a huge rate, and I don't think $220 is a lot for a nice big clean room, particularly the more regional you get, you forget how far everything is in Australia and how expensive logistically everything is to get to. I don't know, I'm always saying to anyone who'll listen that the industry should be like a cartel and they should hold rate.
Sounds like valuations.
And as the demands go up, they should lift it, because everything else is supply and demand. Woolworths doesn't reduce the prices because eggs were cheaper 5 years ago. You know, there's not as many eggs in the market, or there's more people wanting them. You know, and I really would employ the owners to keep pushing the rate as much as you can. And I suppose I can remember so clearly the mining downturn and stuff like that, where all of a sudden it just turned off overnight. People got so nervous and the rates dropped and how long it took to come back. And it's like, you know, you're in business to be successful. We've all got things you can't control. If the going's good, you know, and particularly if you're in a town, but I'm with you, lift your offering, don't drop your rate. Yeah.
Thank you so much for joining us for the first part. If you enjoyed it, please tune in to part 2, where we dig in a little deeper to the future of the motel industry.